Okay, good afternoon, everybody. Welcome to Paul's Monday Market update number 164 for Monday, 25th of November, 2024. Hope you're all well. Hope you've enjoyed a good weekend. Hope you're ready for an interesting week ahead. As always, just before we start, if you're in the room here for the live session, if you can just confirm that you can see the slides and hear my voice, that would be much appreciated. The technology's working in favour rather than against us. Those of you joining us for the first time, thank you guys, thank you very much. Those of you joining us for the first time, Paul's Monday Market update is literally just that. It is me flying through as much as I can squeeze in the next 30 minutes, looking at strength and weakness within the FX markets, looking at some charts of interest you might want to add to your watch list, and then having a look at the live markets. It is just a market update. There's no signal service, there's no trade recommendations. It's just what I'm looking at. It may be of relevance or interest to yourself in your own endeavors. As always, you're always very welcome here. Just remember that you're always responsible for your own trading decisions. If you want to listen to more, you can hear mine and Big Ian's trading podcast, the Togs Trading Podcast. Okay, also now has a website, togspod.com. There's normally a podcast there every Thursday released, and on the website you'll have both the video and the audio version, and you can also see the recordings of my updates and also Ian's trader blog. So if you're not already signed up to that, then please do so. If you want more insight and education, every Monday afternoon, London time, 2 o'clock, I do a webinar for active trades called Monday Market Matters. This week's is on how to use fractals at the start of your week. Okay, I'll share A, what fractals are, and B, how you can use them at the start of your week for some intraday and short-term swing trading. So you can either register on the website or you can look at the QR code there to go join. Okay, let's crack on with our own stuff here. So if you're new to trading or new to joining us, this might look a little bit overwhelming or intimidating. Not really at all. Once you get an idea of it, it's pretty easy to understand. This is just parts of the work that I do at the weekend. I still do it by hand, okay, where I go through the charts, looking to identify where's the strength and where's the weakness, primarily within the FX markets, but then also in indices and commodities. That allows me to allocate my time, energy, and resources better for the week ahead. So what is this telling us? Where are we? Well, here we are. We're into week 48 of the year for the 25th of November. Where's the strength and where's the weakness? Probably not a shock that US dollar remains at the top of the pile at number one. We've talked about it here for the last 5-6 weeks about it growing in strength and how it was pushing its way to the top of the pile. No surprise there. Interestingly, it is joined by Aussie dollar there, okay, in number two. As you can see from last week, from being the bottom of the pile to this week being the into the number two, there's you can see, even if you just look over the last couple of months there, Aussie dollar has been swinging back and forth there, okay, and well, you can find your own narrative for it. Ultimately, I'm just interested in where is the strength and where is the weakness. If we look closer to home, we've talked about this. Gosh, no, I talked about it all summer. Was that basically we see sterling has really rolled over. It's now 6 out of 8. Yeah, we had a couple of months there at being at kind of top of the pile, and as I said, I thought it was a false reading, based upon the strength, or rather the weakness of others, more so than the strength of sterling. And once that cracked and broke, you can see there. And there's an awful lot going on there in the sterling. There's the response to Rachel Reeves' budget. There's also the sort of Trump election victory as well, and how that's sort of powered on the dollar strength, and also really is just characterized over the last month or so the sort of short UK and Europe, long US position that people have been taking post the US Trump win. Joining it down low the pile, you can see euro has fallen to the bottom, and as we've kind of sort of said, for the last month or so, euro is Europe in general is just basically taking the brunt of a Trump election victory there, and that's reflected in the euro there. Now, admittedly, today what we did actually have was we had a little bit of this morning. We basically had a bit of a gap, open. Okay, they don't happen that often on the FX markets these days, but a lot of that was to do with Mr. Trump and his selection of Mr. Bessent as for the new US Treasury Secretary, and that invariably sort of has taken the sheen out of the dollar. And of course, the sort of dollar's loss has been everybody else's gain. And so you can see that. And certainly if you're looking at the intraday charts this morning, there was a couple of nice opportunities off the back of that. But still at the bottom of the pile with euro is Kiwi dollar. Not a massive shock. Yen is kind of popping around in the middle of the pack. Canadian dollar kind of works its way up there a little bit, even though the sort of oil prices have been still remain bearish. Swiss franc there, okay, is still in the top half of the pile there. So it's kind of an interesting one. Some people might sort of look at that and say, well, hang on a minute, dollar, Swiss franc, yen, they're all strengthening. That could be seen as a kind of a risk-off idea, okay, a risk-off sentiment or narrative. But then equally, you've got Aussie dollar, okay, very risk-on, very risk-sensitive currency there, okay, popping its way to the north. So, personally, I think it's just a little bit of, we're in a basically the sort of shenanigans that are going on in the run up to the inauguration. Okay, I think I said it a few weeks ago that we will see shifting sands as basically as was said a couple of weeks ago. Trump's picks for his cabinet has an impact on markets, and that's what we've seen. But also you're running into sort of end of year flows. Okay, people sort of positioning in order to be able to massage their numbers to look them good, but also getting ready for 2025. So it's no surprise that we're seeing, a couple of interesting sort of readings there. But when I look at the individual stocks, if I look there, okay, at all of the sterling pairs, they're all in STAM selling environments. Okay, not really a shock there, as are you can see pretty much most of the Kiwi dollar ones as well, which would just reflect sterling's weakening and Kiwi dollars weakening as well. When I look at indices commodities, as I was saying, oil still remains a strategic short. Okay, Nikkei is a tactical short, and silver is a tactical short. Gold is not an environment, but it did have a good week last week, but it didn't follow through onto to silver. And interestingly, the indexes, okay, for the most part, whilst they're pricing bullish, their momentum has kind of faded a little bit there, so they're not in a stand buying environment. Okay, and once again, I think it's all part of a little bit of these shenanigans, and I think we will see that as we see markets open this week. And remember, it's a kind of an interesting week this week. Okay, so there is some interesting data coming out, right? Certainly for the US, Wednesday's probably the interesting one, where you've got GDP, unemployment claims, and PCE, and you've got FOMC meeting minutes. Okay, Wednesday afternoon, but it'll be an interesting one because, of course, Thursday is the Thanksgiving Day, so the Americans are off, markets are closed, and they're only like a half day on Friday. All right, but I suspect most people will be more interested in their Black Friday deals than trading markets, but we shall wait and see. So it is a bit of a shortened week, okay, in terms of those major US markets. It'll be an interesting, because there is kind of data coming in, and we're getting into the end of the month and stuff. It is so don't be surprised if we shift from boredom to volatility, all right, as we come in and out of those news periods over the next couple of days. All right, we didn't do a charts of interest last week because I was just in London. I just arrived, didn't have really time to do it. So I've got a few here. So I'm going to fly through a few of them. Now, here we go. This is Facebook Meta. All right, weekly chart. Look at that. Been in a great trend, hasn't it, really? But there's been a discernible notice that quite a few of those big Mag 7 stocks, okay, have been coming off over the last couple of weeks, all right? Being sold off there. I was reading there over the weekend that people were worried about Facebook stocks because I think basically we're seeing it here in the UK, but Australia is definitely planning to basically sort of ban under 16-year-olds from social media, and they were worried that this might have an impact on Facebook. I think that's overdone. I have nieces and nephews. I don't think any of them are on Facebook or even consider it as something they would particularly look at or use. It's seen as for old people. So I'm not entirely sure. Facebook it'll have a huge impact on Facebook. Maybe that's just overall narrative. But what I am interested in here is that Facebook last week, okay, we've basically peaked out there in highs, and then last week we printed this really quite nice It's a bearish engulfing candle. You could also say it's a bearish key reversal candle because price pushed to new highs from the week below and then closed beneath the low, the previous candle. It's bearish, all right. No surprise if we just sort of drive up into it a little bit, but I'll be interested to see, does that follow it through and bring it back to sort of the kind of $500 big round number where there has been clearly been ranges earlier this year. So I would be adding that to my watch list and seeing how that particularly plays out. Next one, Netflix. I was talking about how we've seen lots and lots of, as I said, big selling of some of those major Mag 7s, but on the other side, Netflix, all right, well, you can see for yourself, okay, that has been doing very well. That has been in a very clear uptrend on the weekly chart, okay? Weekly charts, monthly charts, they're great charts for stocks. That's where I tend to sort of operate there, okay, rather than trying to intraday stocks. That wouldn't be my particular game. Others do it very, very well. Fair play to them. But, I tend to be intraday on FX and indexes, not so much on stocks. But what you can see here is that's a nice chart. And what I'm always intrigued as well is that we can see that, the sort of, the moving averages, the 20 and the 50 moving averages, okay, have acted as support, all right? This was this kind of really big move of kind of last year, end of October, real big bullish, okay, engulfing candle, key reversal candle there off the 50. That was the kind of, let's say, the sort of genesis of this move. And what I'm intrigued now is that, look at that, we're up, $900, all right, okay, it's the pre-market. I have no doubt that people will now be talking about it going to 1,000, okay, big round number. But the thing I'm always interested in, the thing I'm always talking about is, this is a nice trend. Once price starts going parabolic, once it starts going vertical, I always start getting a bit nervous myself. If you're in the trade, I always say, just basically tighten up your stop and ride it. If you're sat on the sidelines, stay sat on the sidelines because normally this is the kind of the end is nigh. All right, okay. It's like a rocket trying to break out of gravity. It's very, very hard, and invariably what we normally quite see is that basically it falls back and then you get basically a lower high and then it drops back to those levels. So that's what I've been looking for on Netflix at the moment. Then we've got a couple other ones here. SMCI, Super Micro, okay. Two of the companies with Super and Micro in the name, okay. This and both with very different trajectories, all right. So I was kind of intrigued by this, but actually what we've seen here is okay. The pre-market is a big jump. If you follow this company, all right, Super Micro, it was a bit of a darling. You can see for yourself, okay, from where you were here, just 18 months, 2 years back, trading around $10. We flew up here, okay, to peaking up there above $120. You can see we flew up there. And then invariably, just as I was saying, once you start to try and break gravity, gravity tends to take hold, and then there start to be some particular, let's say, shenanigans going on with their numbers, and there was difficulties and issues with basically their earnings, their reportings. All right, their paperwork was very poor. They were basically delaying and putting in their paperwork, and we can see from being up above 120, we dropped to about 40, kind of sort of based a little bit there, but then a few weeks ago, their auditors basically, or they basically changed their auditors, and then new auditors said, thanks, but no thanks. We're not touching this with a barge pole. And NASDAQ said they were going to look to delist unless they got their paperwork and they submitted their reports in on time. And it looked like they were going to be delisted, but now it looks like that there is a plan for them to remain listed on NASDAQ. Hence why we're seeing that kind of a bit of a jump there. Whether that'll be whether that's just a dead cat bounce, we will see over the next day or two and stuff. If it just bumps to 40 and then can't get any higher than that, then it would not surprise me if we roll back over to 20. But it's I wouldn't necessarily say this would be something to invest in or trading in, but it's sheer pantomime to basically to watch and learn and see how markets react to the psychology of traders and investors. Talking about psychology of traders and investors, on the other side, MicroStrategy MSTR. This is the weekly chart here. Once again, something that became a darling, all right, and has just basically from from where we were, $20, all right, okay, 18 months or so ago, you can see, we worked our way up to up and above 100, and then we just ranged between 100 and $200 there for a lot of year. A lot of that basically based upon their owner Saylor, his new business strategy was to effectively to go all in on Bitcoin and to basically every bit of revenue, just to focus on buying Bitcoin. Nobody really takes any notice of what their normal day-to-day work is supposed to be. Everybody was just fascinated that he's literally attached himself to the Bitcoin wagon. He has GBD. I won't. If you don't know what that means, you can work it out yourselves on Bitcoin, and you can see how that has been reflected there. Okay, and so, from being in a range between 100 to 200, over the last couple of weeks, as Bitcoin's price has broken out, so has MicroStrategy, and we can see here there, we went up, we tickled the soft underbelly of $540, but then have fallen about a bit. Okay, pre-market's up there a bit. Once again, this is price that's gone parabolic. Listen, there are smarter, better, fundamental and crypto bros who can explain the business strategy in depth in terms of what they are looking to achieve. He's making. I think he sort of came out the weekend and said, or last week and said he's making. I think he said he's making $500 million a day based upon how much they are, how much Bitcoin's gone up, but also basically selling bonds. It's interesting to see who has bought those bonds. Those bonds are being bought by companies like Allianz, sort of old, you might say old legacy finance companies, etc. So a lot of people will be saying that this time it's different, and this is a change, and we're going through a revolution in business. Listen, if you've been long this and you're in it, fair play to you. It's we shall wait and see. All right, we shall wait and see. But once again, as I said, it's a chart to watch. You might want to add that to your watch list to see how that particularly plays out over the next couple of months. And a couple of others in here, I think. So we've got this is Zoom, all right. I put Zoom in because their earnings are coming out tomorrow. And listen, I'm conducting this on Zoom, all right. So many of us rely on Zoom for reasons that. For me, it's because I hate Microsoft Teams. I find it a pain in the arse and stuff. But you pay your money, takes your choice. I started to get interested in them here. Okay, just after they were listed, Chinese company, video communications, and this is where I had my first bite of the cherry. And why was that? Interestingly, that was at the start of the COVID lockdowns, and a lot of that was driven by I had a Regis office, and Regis basically told me they were closing me out of my office. I wasn't allowed to stay in, but they wanted to keep charging me full whack for the office during the period of lockdown. None of us at that time knew how long it would be going on for, regardless of what we thought. And I just basically I wasn't happy about that, and just basically put a trade on where I went short Regis IWG Group and long Zoom, because basically the whole world switched to basically doing meetings on Teams on Zoom and Teams and stuff, and hence why we saw that share price rally its way up. Absolutely fantastic move. But then once the vaccine came out and everybody started getting out, and everybody was just fed up with being at home, well, you can see from being there, okay, just under tickling the soft underbelly of $600. You can see there actually exactly how we sort of drifted our way down. And really have been in basically just a sort of a base there. Now, if you read Stan Weinstein's books, okay, about stages and stuff, and they are very good books, that would look to me like we are breaking out of a stage one base. Okay, we're moving towards stage two, and on the weekly chart looks even better. So you might just want to look at that. Okay, and as I said, they've got their earnings tomorrow. See whether that gives us a bit of a bump up on that with Zoom. So as I said, might want to just add that to our watch list. And finally, I think this is finally there. As I said, I've put quite a bit. This is XLV, all right, ETF for healthcare. Why am I interested in this? Well, it's part of a matrix that I use to basically identify risk on, risk off if I'm going into intraday trading, all right, but in US indexes and stuff. But this is also interesting because we're back here at around this level of 140. Okay, we've fallen back to support. And, I was always interested here because back at the start of September, what we printed after a nice up move, this is very much a bearish key reversal candle there. Okay, very clearly a bearish key reversal candle there. We pushed to a new high, rolled over, closed, okay, lower than the previous low, And then you can see we basically, as usual, we worked our way back up into it, and then we've dropped our way there from around a 156, trundling down to about 141 there. Okay, so it's been a nice move, and now I'm going to see is support they're going to hold. Key reversals, just to let people know if you're watching, they will be, that's what we'll cover tonight on the VTP stage 1 weekly call. That will be returning, etc. And we'll look at key reversals on that. But I thought it was it's a nice learning lesson, but also to see, is this support at 140 going to hold? All right, so we've done plenty of charts of interest. Let's switch across to the live market and have a quick look. Just bear with me, and we'll switch across. So let's just finish that. Bring this boy up here. Okay, this is, I'm hoping that you can, bang. I'm hoping that you can still hear me. I'm hoping that you can see the charts, and we'll fly through this, okay? This is a profile of indices. What I'm interested in is Dow, NASDAQ, SP 500, Russell, FTSE, Nikkei, DAX, oil. Okay. Oil, as I said, has had a little bit of a bump back up. We thought it broke that trend line there. Okay. But it's had a little bit of bump up there. That's probably also, one of the things that's contributed to a little bit of Canadian strength. But what we can see, Dow continues in a bullish move, and you can see the kind of, we're looking at a gap up there, okay, on the electronic contracts. And as I said, based upon Trump's picks more so than anything there. Same with NASDAQ. Same with Russell, same with S&P, and even the Russell has done the same there. Okay, so as I said, it's going to be an interesting week. There is data coming out, but also Thanksgiving, it could be a bit of a spotty week in that particular sense. Let's have a little look closer to home. Okay, what I'm intrigued here is, what we're seeing is basically DAX, which basically had gone sideways for a couple of weeks, still remains there, but we're printing the bullish pin bar on the weekly chart off the 20-period moving average. Is that going to try and assault those previous highs? All right, if the American indexes go well, is that just going to drag the DAX up as well? Nikkei, to me, I think Nikkei looks to that on the weekly chart. To me, that looks like it's coiling up. All right. It's sat on the 50-period moving average there. Okay. On the weekly chart, sat there. It's holding above it. But, there's also that level of resistance there. As I said, apologies, I'm a better trader than I am an artist, but you get the gist. And I wonder whether we're going to just coil up here and then make a breakout on that. And then looking at UK's been interesting. We talked about it. Okay, we'd had a bit of a sell-off here. Okay, and as I said, we're at a decision point. Okay, indecision at the 50. I'm wondering what we're looking at. I thought if we dropped, we'd definitely be going through 8,000. But you can see we actually had a little bit of a bounce off there. Okay, so you can see for yourself there now. Yeah, you can read into what you want about as to why that happened there. Okay, Thursday, Friday there. There's a kind of a nice turnaround the daily chart there, right? But I think undoubtedly, I'm sure Mr. Starmer and Miss Reeves will be looking to claim that. Okay, I wouldn't go so far as to say that myself. I think perhaps basically we're just there's a little bit of giddiness there, and we'll see how long that plays out for. What did do well last week? Had a good week last week was gold. Having rolled off, okay, come back to the 20-period moving average, okay, back to support. It then basically reversed its way off there. Once again, daily chart there, reversing around off the kind of 100-period moving average. I was intrigued to see when we get up to here. I'm always intrigued to see, does it slice through, or does it use this resistance as a way and a means to reject it, and then basically you're creating lower highs. And if you're lower highs, well then you're running down to 2,500. I think at the moment it didn't flow through it. Okay, today's price action has been a little bit. Interesting. All right, but I think once again that is also a link to the sort of the market's reactions to the new US Treasury Secretary. Silver didn't do the same in terms of it didn't have a sterling week. It still holds above $30 here, okay. But you can see for yourself it didn't have the kind of sterling week that gold did. Bounced nicely off 30, but it just most of the last week just went sideways, isn't it? Just sideways, So nothing. I see nothing there to get excited about. What people are getting excited about is, of course, Bitcoin. We talked about MicroStrategy earlier. We are once again we're just kind of under those edges. That shouldn't be. We should be under those numbers, okay, of big round number of 100,000, right? Every manager's dog's going to watch out for that, see if it, if it pushes towards there, okay, this week. That's what we will be looking at. I'm sure it make for a very nice Thanksgiving present for many Americans who've held on if it shouldn't do that. But you can see for yourself that's just been bullish ever since really. Look, the Trump trade came on as well. I did a piece on that a couple of months back. That has just basically flown through, and with that. Right, let's have a quick look at we'll have a look at US dollar. We'll have one very quick look at Swiss franc as well, for reasons I want to have a chat about, and then as always we'll finish off on the sterling as well. Okay, so as I said, the market's gapped on the opening today, all right, and particularly in the dollar pairs, all right. A lot of that is to do that Treasury Secretary move. But if we look at this weekly chart, bang, still hammering away. But you can see how this week, we've basically, we've opened, we gapped lower. But look at that, the daily chart, we started to basically give up a little bit on the Friday afternoon, and then we've gapped down there. And if I go to the 30-minute chart, you can see where we finished Friday, having rallied our way up after the news, fall our way back, and then gapped up. And we haven't filled the gap as yet, but this is kind of my classic intraday style trading. And if you look at pretty much all of the majors on an intraday basis, they did pretty much this or the inverse of this, depending upon the makeup of the currency. But it was that was the kind of move that we had. That kind of dollar had a little bit of taken out of it, and you can see that when we look at, so for example, dollar against yen, having last week putting a bit of an indecision candle there. Okay, we've started off this week with a bit of an indecision candle. Cable we'll look at in a moment. Euro dollar, remember we said that euro is kind of falling away generally, and that's what continued. Even last week we still did close, even though we had a bit of a kind of a candle here, the Friday afternoon candle. We still closed lower than last week. All right, that's the interesting thing. We still closed lower than this week. Yeah, we've gapped up and open. All right, so here we go. Yeah, opposite the dollar index, gapped up, dropped down, came back up into it. Okay, a bit of accumulation, manipulation, distribution. There, PO3, power of three going on there on an intraday basis. But you can see for yourself, what has been going on there. And dollar is top of the pile on the STAM. All right, and so we still see that as a strength there going on. Let's just finish. I don't want to run over on too far, but I just want to have a quick look at Swiss franc. Okay, Swiss franc, as I said, bumped to number 3 and has been strengthening over the couple of weeks. But what I was noticing on Friday afternoon, this is a Swiss franc profile. They're all on the 4-hour charts. On Friday afternoon, we had a real concerted sort of weakening of the Swiss franc. You can see there, even sterling, which has been weakening against everybody, managed to strengthen against the Swiss franc Friday afternoon. Okay. Bang. The only one maybe is that's not that from last week. Okay, sorry. Here, this coming into the end of last week, even euro at the end of last week, it reversed. Okay, and turned around. Kiwi, which is bottom of the pile, managed to strengthen on Friday afternoon. Aussie against Swiss franc, that strengthened. Right, Canadian dollar against Swiss franc, that strengthened as well. So kind of, I'm curious, interested. I'm wondering whether the S&B was playing up some shenanigans there with the Swiss franc. They're trying to just basically take the wind out of the sails of it there, as it's been strengthening quite a bit over the last month or two. It was just something I particularly noticed there Friday afternoon. Okay, everybody's asleep, nobody's interested, everybody's thinking about the weekend or the Christmas shopping, and then the Swiss franc basically gets a bit dumped there on a Friday afternoon. So you might just want to keep an eye on that coming ahead. Right, let's finish off with sterling. As always, apologies I've run over a minute or two. Just as always, I'm just trying to cover as much as I possibly can in our time together. So, bang, cable. Cable continues. I mean, just look at that. Really, just look at that over the last what's that, couple of months there, from trading as high as 134, we're now trading tickling 125. Right, okay, just nearly 900 pips in a couple of months there. Right, it's just the way that has worked out. That has just basically been sterling weakness and stuff. So I guess I hope or missed the start of the session, it's possible to get access to the recording. Yep, you will. This is recorded and it will go on my blog. So either go to tradingbeliefs.com or FX Trader Paul. And if you just basically sign up there, it's free. You'll get an update of the recording of it later today. So yeah, you can see for yourself, all right? Bang. That's the sort of, the direction of travel. That has basically been, sterling weakness, dollar strength. That's what we're looking at here. Okay. So thank you. You're very kind. That's what we're looking at here. Okay. That's what we're seeing. On look at that, the daily chart for the last couple of months, that is just basically sell the UK, buy the US. That is a reflection on Mr. Starmer and also Mr. Trump and what markets see that. Now, I appreciate there are other contributory elements to that, but you should never underestimate the role of sentiment, okay, or rather the lack of sentiment, okay. You should never really underestimate that. We are still human beings after all, even with all the algo trading. Okay, close to home, let's have a little look at pound against yen. I'm intrigued because here in the weekly chart, look at every week's highs is getting lower, and the wicks are all to the north, aren't they? We're coming up to that 50-period moving average. Is that going to support it, or are we just going to see some sterling weakness and yen strength, in which case we break through it? But I'm kind of curious looking at that on the daily chart. So a nice PO20 set up there on the daily chart, 4-hour chart here. That was the move here. Okay, just it's working its way down. All right, sterling is weakening. You can see that across the board, even against pound against Swiss franc. It's another week of just basically going sideways, really. Even though Swiss franc is strengthening, remember, look at that. That is Friday's candle. Sterling is weakening against everybody. But as we just said, even that it managed to strengthen against Swiss franc on Friday afternoon. You have to wonder, are there some shenanigans going on there in any way? We can see here, these are 4-hour charts for the Comdols. Pound against Aussie, that is Aussie strength, sterling weakness. Okay, Aussie's at 3, sterling's at 6. Even the pound against Canadian dollar, you can see that. Okay, pound against New Zealand is kind of a bit more, not as pronounced, but they're both particularly weakening. You can see that. That's what's happening there. Thank you. Yep, that's the one. Yep, that's it. You can see that there. And if we just look a bit closer to home here, bang. We'll just finish off with euro against sterling as we normally do. What we can see is that, last week is a bit of an indecision high wave candle there. Okay, that's and it's a case of, I mean, if you look at the daily chart there, the 50 is still suppressing it. We don't need to get above it. But what I'm just looking at is a case of both euro and sterling have been weakening. All right, it is literally a case of buy the US, sell Europe, sell sterling, and that is what we're seeing a reflection in there. And that's tough for people to try and swing trade that because of the nature of the sort of the nonsense that's going on in both of those blocks and countries. So there you go, ladies and gentlemen. Let's draw it to a close there. Okay. As I said, I apologize. I'm trying to race through as much as I can. I appreciate I go through it at a lightning pace. Just want to share as much with you as I possibly can. Helps why sometimes it's recorded and put out there, and you can watch it again if you need to be. Nonetheless, I hope you found it useful. I hope it gives you a little bit of help and a little bit of insight into markets and trading. I hope you all have a fabulous week. As I said, it is an interesting week going on and stuff. So make sure that you manage risk, keep your powders dry. Remember, there's the webinar for active trades, and also the for those of you on the VTP, there's the stage 1 coaching call this evening as well. For the rest of you, have a fabulous week. Okay. Take care, and I will see you next Monday. Thanks very much, everybody. Cheers.